The yen fell amid volatile trade after the Bank of Japan maintained its accommodative monetary policy stance at the conclusion of its two-day policy meeting, while Asian shares rose in the broader market. U.S. stock futures jumped after tech giants Alphabet and Microsoft reported quarterly results that beat Wall Street estimates. Meanwhile, Anglo American has rejected a $39 billion takeover proposal from BHP, saying it significantly undervalues the company. Under the proposed all-share deal, Anglo would first need to spin off the controlling stakes within Amplats and Kumba Iron Ore to its shareholders before being acquired by BHP. To give us more perspective and wrap up the week for us, we are joined by Patrice Rousseau, who is the Chief Investment Officer at Ashburton Investments. Patrice, thank you so much for your time. Let's start off with that Anglo BHP news over the past 24 hours. Anglo rejecting that takeover, and as I mentioned, saying that this deal undervalues Anglo and its future prospects. What do you make of developments over the past 24 hours?
Yes, Anastasia, good afternoon to you and to the SABC viewers. Yes, it's a deal that's taken the market by surprise, seeing a huge increase in the share price yesterday. Bear in mind that over the last 3 years, we had BHP see its share price go up roughly 30% on the JSE, whereas Anglo's went down 20%. There was a 50% gap between the two. Yesterday, we've seen the Anglo's share price increase almost by 20% as the deal was stable. Today, it's slightly in the red as the company rejected the offer, but there's still a feeling that BHP might come back with an improved offer. And the whole thinking is about getting their foot on the premier copper assets in the world. That's 30% of Anglo America's output. BHP has got operations in Chile and also bought Oz Mineral last year. So they want to really build their copper footprint, because this is what is used in electric vehicles, in wind farms, and really for this green transition that everyone's talking about. So this is a battle to control the world supply of copper.
Let's move things stateside for a bit and talk about US GDP data, because it was quite interesting to see the whole US yield curve shift, including the two-year yield when that data print came out. What did you make of this, the figure?
Yes, quite interesting. So you would expect with GDP growth disappointing. It was down from 3.4% the previous quarter to 1.6%. Usually that's a signal that the economy is slowing, that bonds might be a safe haven and interest rates might be cut very soon. Actually, what happened is within this report, there were indications that consumption is still strong, and that inflation in the consumer area is still pushing higher. So we had what they call the personal consumption price index at 3.4%, and it was 3% before. So you have this situation, this odd situation of stagflation in the US, inflation but lower growth, that hit the bond market quite hard. Equity markets were resilient, but that's, as you said earlier in your report, Anastasia, due to strong reports overnight from Google and Alphabet.
So, if you had to look at US earnings season, what surprised you the most?
Yes, US earnings, I think we had a mixed bag. So you've had some strong results of late. You had big disappointment from Meta, where the share price pulled back, almost like at some stage 20%. And then you have the strange phenomenon where, in the case of Tesla, earnings disappointed, but the outlook in terms of production of smaller EV cars was quite positive, and the market went the other way. So often, earnings report and the reaction of the share price is more dependent on the outlook that the company management is giving than actually the results that they are actually reporting. Bear in mind that the US reports quarterly earnings, so it's quite noisy. So you only get a picture of what's happened in the quarter rather than a longer term picture.
Okay, then let's talk about SA corporate earnings. So there are companies that are still publishing their numbers. What are the themes you're going to be paying attention to?
Yes, SA earnings this year probably going to deliver 6 to 7% earnings growth, so slightly above inflation, some real growth with earnings. We see stronger earnings in the next year. So we're expecting areas like the consumer discretionary to be quite strong. There's still much of a recovery there. The financial sector to still deliver fairly steady earnings in the double digit, and some recovery with the weaker rand and higher metal prices in the mining shares. So we're seeing a few of those on the positive trend. On the negative, I think there'll be a slowdown in the listed property sector. You have the chemicals also taking a bit of a knock, and then energy also. So a bit of a mixed bag. So some stronger parts of areas growing. On the other side, you have, also we have in South Africa, really the tech theme is through Naspers, with Tencent expected to improve substantially. That will filter through, but overall probably 6-7% earnings growth.